Stock market versus Main Street. The stock market is within 2% of new all-time highs, and Wall Street has enjoyed huge profits due to the uncertainty created by on-again, off-again talk of a trade war. The adage that the markets trade based on fear and greed is on full display since January 2025. However, underneath the record-high stock prices, robust jobs reports, and economic growth enjoyed by many Americans, there is a dark cloud forming and being ignored at the same time. If you became an adult since 2000, your generation has only seen robust economic expansion, great jobs, higher pay, but also a pandemic and distant wars in other countries. In other words, Americans have been shielded from the turmoil that is more common in the rest of the world. This may be the first time that a recession is caused by a sitting president of the United States. So, what does that mean? Well, before we answer that question, let's point out two conflicting indicators. One, a set of trailing indicators, and the second, a set of leading indicators, both which may deviate from more recent historical norms over the next 6 to 9 months. The trailing indicators past. The earnings of companies in the U.S. have been robust and continue to remain somewhat stable. Home prices have accelerated to new highs, and 401k millionaires grew at the fastest rate in decades. The stock market's streak without a recession is currently the longest bull market on record. Interest rates dropped to zero and remained there until inflation began to appear, prompting the Federal Reserve to increase interest rates in response. The leading indicators, current. Private sector jobs totaled only 37,000 new hires, the lowest in more than 2 years. The national debt, highest among all major industrialized countries, with exception of Japan, which has never fully recovered from its financial crisis in real estate and financial markets decades ago. A budget bill in Congress will increase the debt for years to come on the unsupported claim that tariffs will pay for the deficit and trillion-dollar tax cuts for the wealthy and corporations. In 2008, during the Great Recession, mortgage delinquency rates climbed to 4.25%, declined to less than 1% in 2022, but has risen to almost 2% in 2025. Gross domestic product, GDP, grew only 1.6%, below expectations. What these two conflicting indicators are telling us is that we are in the middle of a transition that will require Congress to navigate tremendous risk and uncertainty for some time to come. In other times, America coordinated with its allies to successfully navigate choppy waters, but the current policy of go it alone will test the resilience in the financial markets and boardrooms of corporate America.